Solar stocks are on the bid as President Joe Biden's Build Back Better plan finally catches traction, now under the new name, the Inflation Reduction Act. And although we still have a long ways to go, we do have support from Senator Joe Manchin. Will the upside breakout continue? Are there technical developments to support the continuation higher? And more importantly, what does the hard right edge have to say? Sit back, relax, we'll go full screen on the MotiveWave platform, and I'll take you through Invesco's Solar ETF, ticker TAN. Going full screen on the charts inside the trading analysis edition of the MotiveWave platform, looking first at price action in the Invesco Solar ETF. If you're interested in more information on Invesco's Solar ETF, you can of course visit their website anytime at Invesco.com. But quickly taking you through the top holdings within the Invesco Solar ETF, ticker TAN, we will see Enphase Energy and SolarEdge Technologies represent better than 22%. So in addition to reviewing the TAN in this video update, we will also show you the charts of ENPH as well as SolarEdge Technologies, SEDG, as both charts tell a very similar story to that of the overall TAN. Now we begin our journey in October of 2018 when the TAN was trading for $17.47 a share, at which point we see evidence of a trend-establishing five-wave breakout, which takes us to $41 in February of 2020. We then proceed to sell off with the broader market indexes into the Wave 2 coronavirus pullback. The COVID low in this case retraced 78.6% of the Wave 1 breakout. Now, interestingly enough, the actual Wave 2 low was 21.14 compared to the 786 retracement fib level at 21.06. Now, from a Wave 2 low, we project our upside resistance in Wave 3 by measuring the magnitude of Wave 1 and projecting it from the Wave 2 low. And in the trading analysis edition of the MotiveWave platform, we have color-coordinated fib levels. Blue is shallow, green is most common, and in this case, the most common Wave 3 and 1 relationship, a 161.8% projection of Wave 1, was met and exceeded in November of 20. That level came in at 86.93. We met, we exceeded, we consolidated, and proceeded to the next most common Wave 3 and 1 relationship, which is a 200% target at 121.37. The Wave 3 high was 125.98. Now, for those of you who are new to Elliott Wave, perhaps you've just stumbled upon it after watching our content. In the world of Elliott Wave, we find corrections of the, quote, same degree will often tend towards equality. And that guideline of equality can be in either magnitude of correction or the duration of the correction. And rarely, but sometimes, we will see Wave 4 corrections demonstrating equality to the Wave 2 counterpart in both duration, time elapsed, and magnitude, the percent correction. Which means from the Wave 3 high at 125 back in January of 21, if we would have measured the Wave 2 pullback of the same degree, and had we measured that Wave 2 pullback of the same degree, and projected it from the Wave 3 high and looked at that level as a support zone, we would have essentially nailed the low. And in this case, we can quickly ask the trading analysis edition of MotiveWave or any edition of MotiveWave to quickly measure the Wave 2 and project it from Wave 3. I can either right-click on the Wave 4, ask it to give me ratio analysis of 4 compared to 2, or I can just quickly use my keystrokes, which are very handy when working through wave counts. So in this case, a quality of Wave 4 compared to 2 in percent correction came in at $63.62 a share. Now in the email and the chart update I sent out, I made note of the fact that both the February, the February, as well as the May low all found support more or less in the vicinity of the 4V2 100% target at 63.62. Yes, we did temporarily break south of it and in fact moved as low as $55.54, but we ultimately proceeded to move right back above the Wave 4 and Wave 2 equality projection. Now, when we dive inside of the Wave 4 pullback, I will take you off of the weekly and down to the daily time frame. Allow me to adjust scale, and you can see the Wave 4 pullback represented in this chart. Very similar to the way corrective waves, the overall correction wave 4 and wave 2, in addition to the way corrective waves of the same degree or corrective positions of the same degree will tend towards equality, we also see legs of corrections also tend to be equal. Meaning if we zoom in on the orange 3 to orange 4 decline and take the same Fibonacci measurement of the initial move to the downside and project that from the X wave high, we will find that this was more or less a measured move correction, meaning the secondary wave to the downside was more or less equal to the initial move off of the high. So we have a zone of support at 63.62, and if we go inside of the wave 4 and we measure the initial wave off of the high, which we suggest to be a W wave, we will arrive at an equality projection at 54.58, meaning the low of 55 was quite appropriate. This gave us two key fib support levels between 54 and 63. As we've seen those levels hold, we have now seen a pivot back to the upside in what looks to be a trend establishing 5-wave breakout. Now, another telltale sign that suggests this entire move has been in fact a corrective pullback. Another telltale sign that would suggest this is a corrective pullback is the fact that price action throughout the entirety of the corrective wave was maintained and contained within parallel trend lines. So what that means moving forward off of the weekly down to the daily and adjusting scale once again is we now need to extend the upper boundary of this corrective trend channel and look at that as an area of technical resistance on the breakout higher. Now, although last week's news was certainly a catalyst to expedite the break higher, this is a technical development that's been in the works for quite some time. In fact, if we take a look at what's referred to as our red count, this is simply the analysis file name. If we take a look at our red count, we have been tracking this very wave 4 pullback for quite some time with our clients at Trading Analysis, and we have been looking at this as either ABC, at least a move to 93, or alternatively, we have been considering this to be 1-2 post wave 4, which means the upside bid in wave 5 could just be getting underway. In fact, if I take you inside our client member website, taking you back to our strategy update from Monday, July 25th, which is the strategy update for Tuesday, July 26th. And by the way, these are all timestamped, so you can quickly navigate to the section of interest. Looking at this chart, you'll notice we were trading 73.85, looking at this as a completed either A, B, or 1-2, which taking you back to motive wave, you can see the AB, or what we now believe to be 1-2, has taken off significantly higher. So that's a look at price action in the overall Invesco Solar ETF, ticker TAN. And although we've seen a very significant move off of the May low, in fact, we've had a 54% move back to the upside in the TAN, we feel the tactical and confirmed low-risk entry opportunity is still yet to present. Going back to the technical resistance of interest, if I simply extend this trend line, you'll notice we are meeting resistance right at about the upper boundary of the corrective channel. We also need to consider a retracement of the decline from the X wave high, which is essentially the move from October 31st down into May. And what we'll find is we are sitting between a 618 and a 786 retracement, meaning this is likely another instance of 5 waves up. This should give us some resemblance of a corrective pullback, and that is the area that we will be looking to target with clients for a confirmed entry opportunity and swing trading opportunity in both stock and options. So the chart looks great. The technical levels are noted and are on watch. The move to the upside has been met with an acceleration gap. We have support from the top 2 components within the TAN, and we're going to be looking to execute and have this on watch for our August playbook. So that's the TAN. It looks great. Keep it on your radar. This entire 5th wave development could just be getting underway. In fact, if we take a look at upside targets in wave 5, of course, the first target will be a move back to the wave 3 high. The next target will be a 1-2-7-2 correction. The next target will be 5 and 1 equality at 133. And if we get above 133, this could move all the way to 157.42. Now again, this is the Invesco Solar ETF, ticker TAN. Within the TAN, we have SolarEdge Technologies and ENPH Energy. Looking at the chart of SolarEdge Technologies, ticker SEDG, we find a very similar wave count suggesting a wave 4 correction completed in May, and we now have the initial 1-2. We'll be looking for a smaller degree or shorter term 1-2 development, and that is where we will be looking to target a wave 3 of 3 breakout with clients. From SolarEdge to ENPH Technologies, or ENPH Energy rather. Looking at ENPH, ticker ENPH, we have a very similar wave count with a wave 4 triangle consolidation now looking to break higher with 1-2. We're going to be looking for another instance of 1-2, and then it should be off to the races, and there could be significantly more runway ahead for the renewable and solar stocks. So that's it for this video update. I hope you enjoyed the content. Check us out anytime, tradinganalysis.com. We'd love to have you on board to stay ahead of the next major market development. Be safe, have a good one, stay healthy, and we'll see you back for our weekly Wednesday live stream show.